Welcome back. You're watching The Money Show, and now it's that segment where we do your life financial planning, because there are plethora of funds available in the market. But how do you assess which is the right fund for you, which is the right fund for what kind of financial plans? So to help you navigate through all of this, today with me I have Shweta, Rajani, Head Mutual Funds, Anand Rathi Wealth. And just in case you want to send across your questions, you can do that on our WhatsApp number, which is 865-797-4571. You can also email us your questions on The Money Show at etnow.tv. Hi, good evening, Shweta, and welcome to the show. Let's take our first viewer query, which is coming from Jaes. He's from Pune. Okay, so the current SIP amount is almost around 1 lakh rupees. And do I have Jayesh on the phone line with me?
Yes, I am here. Yeah.
Hi, Jayesh. Good evening. Welcome to the show.
Thank you. Thank you.
Okay, so you are doing SIP in HDFC Sensex, ICICI All Season Bond, Kotak Emerging, HDFC Gold, ICICI Nasdaq, Quant Small Cap,
Right.
Quant Momentum. All right.
Right.
So
Right.
after 3.5 years, you want to buy a car up to 15 lakh. Retirement corpus is 6 crores after 21 years, and there's a goal lined up for child education and marriage, which is 1.5 CR in 12 and 15 years. And other
Yeah.
goals are flexible. For that, you need 2 CR separately for 15 years. Okay, so I
Yeah.
just want to know, do you have a financial planner lined up for you from whom you've taken all the suggestion recommendations for your investments?
So this plan I have made myself,
Okay.
and depending on learning from your videos and other planners which present
Sure.
on YouTube.
Sure. So I just want to understand one thing. Since you have a very long time frame, and I'm sure even Shweta would want to highlight this, HDFC
Mhm.
Sensex is fine, but then any specific reason why you've put 20% in ICICI all season bonds?
That is for my short-term goals, like buying car and
Okay.
any
Oh,
other
okay.
short-term goals. Yeah.
Interesting. Okay. So a 15 lakh budget for a car that you want to buy after 3.5 years, is that good for you? Will the you won't be short of money?
No, I think I have some amount in other
Already. Okay.
instruments as well, like FDs and
Okay.
savings. So
Okay.
including that
Okay.
and this fund, I would be buying the car.
Very good. I think, Jayesh, you're quite a experienced investor also. I believe you track markets as well.
Yeah, once in a week or something.
Okay. That's very good. In fact, thank you so much for sending us your question, because via your question, a lot of learnings for other investors are also there, and Shweta would want to highlight on all of that. Shweta, very good lineup of his goals, his selection that he's done on his own, considering short-term, medium-term and long-term goals. Your first comment on his portfolio and the learning that other investors or viewers might want to take from his portfolio.
Absolutely, Kavita. Hi, Jayesh, and I have to, uh, congratulate you because you've actually thought through your objectives, and your asset mix is also almost there, and the fund selection. So, all of that is, I would say, almost 8 on 10, which is commendable, and all this coming in from your own interest and learning. I just have few observations which I'm going to, highlight, which may help you in your portfolio. Is one, see, for most of your goals, you've listed them down beautifully. What you need is to achieve all of those goals, you'll need a target return of around 12 to 14%, right? To get to that return objective so that your goals can be achieved, you somewhere need to have an asset allocation of you can go up to a 75-80 equity, and the rest of it in debt plus gold. Gold, you have 10%. I would say gold only if you need it for future consumption, invest in gold. Else, you can split that in that 80-20 ratio of equity and debt. Now, when I say debt, it includes something like your ICICI All Season Fund. It also includes your FD, bank balance, insurance, all of that. So just go back and relook at this. If you're more than 20, then I think you can optimize it to 20 and move the rest to equity. With the current SIP as well as the lump sum that you're doing, you will be able to achieve the goals that you've mentioned. So you're very much comfortable along with the 10% step up in SIP. So, from that standpoint, the higher you can do a step up, the better it would be. Just one thing, on your asset mix, get that straight. Point two, on the schemes that you've mentioned. Now, what I noticed was that while a lot of the schemes that you have are good, you have some theme-based funds, index funds in the portfolio. Index is something that you can avoid because my own experience is that being in an active fund, you can get that 2-3% extra over and above what the index would deliver. So the HDFC index as well as the NASDAQ fund is something that you can stop your SIP and redeem
Right.
whatever investments you have. Apart from that, the portfolio seems pretty good to me.
Okay. Okay. All the best, Jayesh. And quickly, Shweta, let's move on to our next viewer. Mr. Srinivas is on the line with us. Hello, good evening, sir. Thank you so much for sending us your question. Your query is on NPS, right? Okay. So is NPS Tier 1 account only for the pension calculation, and can you only invest in Tier 1 to get a greater pension? That's it?
Right, right.
Okay, perfect, sir. I'll just move on to our expert and she will answer your query. Shweta, we're running out of time, but yeah, what will be the answer for Srinivas?
It's a quick one. NPS Tier 1, yes, gives you the pension benefit, but if you're looking at long-term pension options, then you can also go in for avenues like retirement funds, equity funds, all of it. I'm just in the next 2 minutes going to tell you a quick comparison. If you're doing a 50,000 NPS Tier 1, it also gives you the advantage of a tax deduction, ATC, tax advantage. With that 50,000, let's say you're going to go in for another 30 years, you will get to a net corpus of around 1.5 CR, including the 60% that you can take as lump sum as well as the annuity. But if you put the same thing as an SIP in a mutual funds, instead of a 1.5 CR, you can get to a 2 CR post-tax. So therefore, you may want to look beyond a NPS Tier 1. The mutual fund will give you liquidity advantage, post-tax better returns. So, that's my quick advice to you, that you can go beyond a NPS Tier 1, even if you're planning your pension or retirement.
All right, on that note, it's time up. I know we had a lot of other questions to be included in this show, Shweta, but then running short of time. Thank you so much for being on the show and helping our viewers with their financial portfolio. And the viewers, we couldn't take their questions today. We'll be doing that tomorrow. But just in case you are still looking at answers or you still have queries on your financial portfolios, do send across your question on our WhatsApp number and email ID. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.